Have you ever wondered how someone goes from delivering newspapers to becoming one of the richest people on the planet? Welcome everyone, and thank you for joining us at the Giant Success Stories. We're going to explore the fascinating story of Warren Buffett, also known as the Oracle of Omaha. We will uncover how this regular guy became one of the most successful investors of all time, and what we can learn from his journey. Let's get to the story. Early life. From paperboy to penny pincher. Warren Buffett's journey began in Omaha, Nebraska in 1930. The Great Depression loomed large, casting a shadow over his childhood. Witnessing the economic struggles firsthand instilled in him the importance of financial security. His father, a stockbroker, played a pivotal role in shaping his future. Despite the economic downturn, his father managed to run a successful stock and bond business. Young Warren spent countless hours exploring his father's library, developing a fascination with the world of investing. By the age of 7, he'd already discovered a book in the library called 1,000 Ways to Make $1,000. That sparked something in him, a desire to build his own wealth. His entrepreneurial spirit blossomed. He started his first business, selling Coca-Cola door-to-door, a testament to his early grasp of the power of branding. This wasn't just about earning pocket money, it was about learning the ropes of business firsthand. At 11 years old, he took a big leap, using his savings to purchase his first stock, 3 shares in an oil and gas company. This initial investment, though small, held a valuable lesson. The stock price dipped soon after, teaching him the importance of patience and a long-term perspective in the stock market. Building a foundation, education, and early investments. Driven by his passion for business, Warren excelled in his studies. He enrolled at the University of Pennsylvania, using the income from his rented-out Nebraska farmland to cover his expenses. Interestingly, Harvard rejected his application for a master's degree, leading him to Columbia Business School. Here, fate intervened. He met Benjamin Graham, a legendary investor and author of The Intelligent Investor, a book that would become his investment Bible. Graham became a mentor to Buffett, teaching him the tricks of the trade. Buffett soaked it all up, like a sponge. He learned to analyze companies carefully, to look beyond the hype, and to focus on the real value they offered. This became the foundation of his incredible investing success. Graham's teachings on value investing resonated deeply with Buffett. Value investing focuses on buying stocks that are trading for less than their intrinsic value. This approach prioritizes long-term fundamentals over short-term market fluctuations. After graduating, Buffett's introverted personality initially hindered his job search on Wall Street. However, he conquered his fear of public speaking by taking a course, a decision that proved to be a turning point. Benjamin Graham, recognizing his potential, offered him a job at his investment firm, going solo, Buffett Associates Limited. In 1956, at the young age of 25, Buffett ventured out on his own, establishing Buffett Associates Limited. He operated from his home office, managing the business himself. He attracted investments from friends and family, starting with a modest sum of $105,000. Influenced by Graham's teachings, Buffett initially focused on cigar butt investing. Imagine finding a discarded cigar on the street. You can enjoy a few free puffs. Similarly, this strategy involved buying undervalued stocks with little upside potential, but a price so low that even liquidation offered value. This unconventional approach proved successful. Over the next 6 years, Buffett Associates Limited witnessed remarkable growth, multiplying its net worth to a staggering $7.2 million. The evolving investor, from bargains to businesses. As his portfolio grew, so did the number of potential investors seeking his expertise. However, many were skeptical of this young, unassuming man managing their money. Despite their initial reservations, those who entrusted him with their investments were handsomely rewarded, with their portfolios experiencing an average annual return of 29.5% from 1956 to 1969. This significantly outperformed the market average. However, Buffett wasn't content with just finding cheap stocks. He began to shift his focus towards companies with strong fundamentals and a sustainable competitive advantage, a concept he termed an economic moat. Companies like Coca-Cola, with their powerful brand recognition, exemplified this concept. Berkshire Hathaway, from textile to titan. In 1965, Buffett's path took an unexpected turn. He invested in Berkshire Hathaway, a struggling textile company. While the company itself wasn't particularly attractive, its stock price was dirt cheap, trading at around $7 per share. Recognizing an opportunity, Buffett began accumulating shares, accumulating a controlling stake. However, the company's core business wasn't part of his long-term vision. He envisioned Berkshire Hathaway as a holding company, a platform to house his future investments. He phased out the textile operations and began acquiring stakes in high-quality companies like American Express and the Washington Post. The insurance edge, a cash cow. One of Buffett's most strategic moves involved venturing into the insurance industry. Insurance companies collect premiums from policyholders, essentially holding onto large sums of cash. Buffett recognized the potential of this cash flow to fuel further investments. Starting in 1967, he began acquiring insurance companies like National Indemnity and GEICO. These acquisitions provided Berkshire Hathaway with a steady stream of cash, a float, that could be used to invest in other businesses. This strategy transformed Berkshire Hathaway into a financial powerhouse, building an empire. Coca-Cola and beyond. Buffett spent the insurance float on strategic purchases. He targeted companies with strong brands, loyal customer bases, and a proven track record of success. Coca-Cola became a prime example. Buffett recognized the immense value of the brand and its enduring appeal. He gradually acquired a significant stake in the company, making it one of Berkshire Hathaway's cornerstone holdings. Other notable additions to the portfolio included iconic companies like Dairy Queen, Gillette, and See's Candies. These long-term investments proved highly profitable, solidifying Berkshire Hathaway's position as a dominant force in the business world. The Oracle of Omaha, wisdom and economical thinking. Over the years, Warren Buffett earned the nickname Oracle of Omaha for his ability to identify and invest in undervalued companies. Warren Buffett's investment philosophy is a holistic approach built on several core principles. First and foremost, he emphasizes value. Don't chase fleeting trends or get swept up in market excitement. Instead, focus on companies with strong fundamentals, a history of success, and a track record of solid performance. Buffett is a long-term investor. He believes in building wealth steadily over time and avoids the get-rich-quick mentality. This long-term perspective requires discipline and emotional control. The market can be volatile, but it's crucial not to let fear or euphoria cloud your judgment. Stick to your investment plan and avoid impulsive decisions. Buffett is a lifelong learner who emphasizes education. He reads extensively and constantly seeks knowledge about investing and the strategies of successful investors. Finally, Buffett champions living within your means. Financial success doesn't require a flashy lifestyle. Focus on getting value for your money and avoid unnecessary spending. By following these principles, you can develop a sound investment strategy inspired by the wisdom of Warren Buffett. Buffett's frugal lifestyle stands in stark contrast to his immense wealth. He continues to live in the same Omaha house he bought in 1958 and is known for his fondness for Cherry Coke and McDonald's breakfasts. This down-to-earth demeanor resonates with many and adds to his legend. Legacy. Beyond billions. Warren Buffett's impact extends far beyond his personal wealth. He has become a revered figure in the world of finance, inspiring generations of investors. His commitment to philanthropy is equally remarkable. He has pledged to donate the majority of his fortune to charitable causes. Buffett's principles aren't just for the super wealthy. They can be applied by anyone who wants to take control of their finances and build a secure future. Whether you're just starting or looking to refine your investment strategy, there's something to learn from the Oracle of Omaha. Remember, investing is a marathon. Don't get discouraged if you don't see results overnight. Be patient, stay disciplined, and keep learning. By following in Buffett's footsteps, at least in spirit, you can put yourself on the path to achieving your financial goals. So, to wrap things up, Warren Buffett's journey is an inspiring one. He went from a kid with a paper route to one of the richest people in the world. But it wasn't about luck or some secret formula. It was about hard work, a smart approach to investing, and a focus on value over flash. We learned about his core principles: finding undervalued companies, holding on to investments for the long haul, and staying calm during market ups and downs. He also showed us that living a simple life and being generous with your wealth are important parts of the equation. Buffett's story isn't a guarantee that you'll become a billionaire, but it offers valuable lessons for anyone interested in building wealth. Thanks for joining us today. If you enjoyed this exploration of Warren Buffett's remarkable journey, don't forget to like and subscribe to Giant Success Stories for more inspiring stories from the world of business and finance. Let us know in the comments below what other financial titans you'd like us to feature next time.